Hello! After talking about Win Resorts, I made a video about it earlier. Now it's time to talk about Carnival Corp, which is a company that I also own. Same thing as with Win. And as you can imagine, again, this is a consumer cyclical company. And so I bought this the same time I bought Win pretty much, which was 2020, around these levels when we had the market slump. And yeah, I bought it at a low, I think it was like 8 or 9 or something of that sort. I could be wrong. But yeah, I think it was about these levels over here where I bought it. And I'm, kind of playing this for a swing trade again. It's not a long-term investment. It's mostly a swing. It's a trade that I'm gonna be holding for maybe a year or a year and a half or so, and then look to actually sell it when the company's stock price goes up again. And again, you will see that this one is a cyclical company. It goes up and down quite some. It does have its slumps, although from 2010 and on, it has been going up for the most part. Each time it came to fall down again. Now, we do want to take a little bit of a look and see what the company is about here. And you will see that the P ratio used to be pretty awesome here. And this is one of the reasons why I really like this company. It used to be pretty fine. And then it had the pandemic years, of course, and it obviously had a little bit of a slump. And they did have to print some shares again, like issue some more shares, although they look to be buying back some, I suppose, over here, as we are seeing, it's going down. But overall, they had to sell a lot in 2019, 20, 21 to fund themselves. And of course, the numbers here are very, very negative because the operations have been, lackluster, as you would understand during the pandemic. Very, very tough for a cruise company to actually continue its operations. It's almost impossible. And all these numbers have been massively affected by the pandemic. Return on equity has been negative. All the returns have been negative. So you would expect that. Again, this is a play that I'm making for a swing. This is a company that I'm willing to buy, spend some money, and wait for it to play out and see whether they will be able to exit the pandemic and recoup some of their losses, and so that the stock price goes back up again. And when you do that, there is risk for sure, but there is a significant reward if things go well. And as I explained with a previous video about Win that I made just earlier today, when I do that, I'm basically buying, let's just say, 3,000 or 4,000 worth of shares, which is a small percentage of my portfolio, and that's a key. You don't want to be buying much. And the reason that you're buying is you may want to triple your money or 4x your money, which is exactly what I did with US Steel back in 2020, and I already sold that one. But when you do that, you're effectively risking, let's just say, 3,000 or 4,000 to make 15,000 or 16,000 to actually triple or 4x your investment. And over here, you'll see that this is probably worthwhile because if you buy it near 8, where it was when I bought, you are actually betting for it to go maybe 40 or 50 or something of that sort. Maybe I would be willing to sell around 50 or so, because this is where it has been a significant ceiling, as you'll see here. It has been going down many times. It's sort of like a resistance level, about 50 for this company, as you'll see here. So maybe if it reaches 40 to 45, I should potentially sell if that happens. And so yeah, I bought at a low level when it was going down, and I'm willing to risk the money, to risk it a little bit, so that I can potentially triple or 4x my money. And I think even at 18, it's a potentially interesting swing trade. Again, it's not a long-term investment that I would make, but it's a potential swing trade, and even lower, it's even better, of course. These kinds of cyclical markets and cyclical companies, it really, really pays if you can buy it at low levels. And this is what I'm trying to do when I'm actually trading those. And we want to take a little bit of a look at the income statement here. See that the company was doing fairly well in the previous years, and as expected, same with Win. They are losing a lot of money because of the pandemic. They are getting crushed over here. And what about their balance sheet? That's a very, very interesting thing here. The fact that they still have positive equity, even though they have been losing a lot. Remember, Win had negative equity. This one is still positive, although they have lost a lot. It's almost 50% down, but it's still positive. So they should be able to fund themselves for a little while still, without even the need to get more debt. And yeah, they did issue quite a few shares also. This is something that you need to bear in mind as well. They did issue shares, 5 billion here, 5.5 as you'll see. So yeah, that's something that you need to take into account. The cash flow statement here, you will see that the net income has been terrible in the last couple of years, and this affects their bottom line, of course. And the net cash provided by financing activities is very, very positive because they had to finance themselves. So they had to get quite some debt here in order to continue their operations, of course, and issue some shares again. So yeah, that's something to be expected. And the free cash flow has been deeply in the negative, as you would kind of expect, although a little bit better lately. Yeah, this company has been really, really annihilated from the pandemic. And if we take a look at the stock evaluation tool here, we can kind of see what it could potentially make some sense to pay. Again, this is not a tool that I'm willing to use normally for a company of that sort, because I'm not looking to buy the company for the long run. I'm looking to swing trade the company and try to pocket some profit if it reaches back its previous levels. If it if it honors its cyclical nature, that's pretty much it. I'm not really looking to buy the company for a fundamental play. Although this one, you may have actually some argument for that. Not right now because it's not doing great, but generally speaking, it wasn't a bad company before that happened. Yet I don't really like to hold cyclical companies for a long time. I like to buy them low and sell them at their peak. It's not my thing to hold cyclical companies because they tend to go up and down a lot. And why would I hold a company as it's going down? I prefer to buy it when it's lower, just risk a little bit and take it for a swing and sell it when it's at its peak again. So, the revenue growth that we're going to be using, of course, we're going to exclude these 3 years. It is 2 years, basically. Maybe even 2019. It's mostly 2017 and 2018 that we're going to go with, because this is what makes sense if the company goes back to its previous years, normal years. And yeah, the net income margins have been about 15 and 16. I'm gonna go a bit less, of course, because of the extra risk. And the free cash flow margin over here, 90 and 57. So I think it makes sense to go like 60, 70 and 80 here. And I'm gonna go 13% for the annual return. Let's see what that gives. So yeah, this gives us a very, very much lower value, and that has a lot to do with the revenue growth, of course, and the margins here, they're very suppressed, so you would kind of expect that to get such a low value here. And this is why this is not a company to trade for to actually hold for the long run. It's scary and it could go wrong, especially at this price. If it's like in the low 5, like in the low 10s, maybe 5 or 4, then it may make much more sense. But as it is right now, and with the current financials, it's definitely not a long-term play. But as I mentioned earlier, it's potentially a swing trade if you are willing to take the risk. So, count these factors, think about these things before you are entering this kind of company. You really need to know that you are taking way more risk here to potentially make some like triple your money potentially even in the future if things turn the other way. It could happen, and especially for me, when I bought near low 10s or so, like below 10, it's much better even, because I could even see myself quadrupling my money if this goes back to normal. So this is why it pays to buy these things, these companies at their lows, this kind of cyclical companies, that is. So hope you enjoyed the video. Hope it helps you a little bit play this kind of cyclical stocks. There is a lot of money to be made in these companies, as long as you are willing to risk a little bit to potentially triple or quadruple your money when the cycle reverses course and you have you're having the peak at some point. So yeah, it's good to at least know that these kind of options exist if you're willing to spend a little bit and take a little bit more extra risk just to make some more. And again, this is trading, this is not really long-term investing. I'm not holding this company the same way I would hold Facebook or Alibaba, which I would be fine holding for like a decade. This one I'm basically buying in a year ago or today and looking to sell in a year or maybe a year and a half, basically when the cycle goes back to normal. It could be 1 or 2 years or so for the most part, but I'm gonna be selling for sure when it reaches a peak back there. So thank you for watching this one. I hope you enjoyed. If you did like this video, you may want to watch the one that I made earlier. It's about Win, which is a similar type company that can give you some ideas about how to swing trade and potentially make some money as the cycle goes back to normal and has its peak. Thank you for watching this. See you soon. Bye bye.